please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the Walmart-Flipkart deal announcement is definitely on the cards. Walmart is expected to announce the acquisition of a majority stake in India's homegrown e-commerce major today. Our colleague Ritupurna Boyan caught up with Niti Aayog CEO Amitabh Kant. Let's hear out what he had to say with regard to this deal.
One of the largest and biggest deals is happening tomorrow. Do you think that the Flipkart-Walmart deal could disrupt the e-commerce sector in India, the digital commerce sector in India?
No, let the market decide. You know, the market is the best place.
Right.
Government is at arm's length in all this.
Right.
It's, you know, companies unite together, companies progress together, companies disrupt markets, companies, you know, decide on all these decisions based on the market reality. And I think that's how a country's growth takes place, when government leaves it for the market to decide.
Doesn't it also show the interest of big MNCs in sectors, emerging sectors like e-commerce, you know,
No,
Walmart coming into the e-commerce sector?
No, that's because we are still at the beginning of the e-commerce. We are still about 2%. So the real growth in e-commerce is just beginning to happen. And I think in the years to come, India will become a very major e-commerce market. So when you look at values of these companies, it's not the present value, but on how the market will grow for the future. And I think the e-commerce sector holds immense amount of promise for the future.
And my last question, sir, what will be your advice to both the partners, both Walmart and Flipkart, on this, especially, you know, because they are you know, about to, you know,
well, we wish all partners who get into India, all investors who get into India, all the best. The government will always act as a facilitator, as a catalyst, and would like all these companies to grow and prosper. India is a very vast country, it's a huge market. We would like these companies to make the Indian market grow, to ensure that the producers of India benefit from e-commerce, and actually MSMEs benefit from them, rural areas benefit from them, and that their products are able to reach and penetrate global markets.
Okay, well, let's move on then. Vijay Mallya has lost a $1.5 billion lawsuit in the United Kingdom filed by Indian banks. Lenders can now enforce the court ruling in India on Vijay Mallya. Sanjay Suri joins in from London to take us through the details of this order.
A very significant ruling by the court here and a big setback for Vijay Mallya. This case has been proceeding in parallel to the main extradition case, and in this case, Indian banks to whom Mallya owed money sought British court approval for enforcement of an Indian court order that had ordered the freezing of Mallya's assets worldwide, including Britain. Out of those assets, Mallya had been claiming £5,000 a week as living expenses, a sum that he said should be raised to £20,000, and that plea was accepted by a court, more or less. So he's been getting about that much. Now, that stands in question now, because the court says its order now is final. So there is the question now immediately even whether Mallya will be able to find enough living expenses in the short term that he believes he has a right to. Beyond that, all his assets will be in question and he will have little access to them. The court order will have very far-reaching consequences, whether it comes to assets in Britain or in South Africa or elsewhere. Of course, a lot of his assets are not in his own name, but it has been indicated to the court that the line of separation between him and the facade put up over these ownerships is a very small one. So Mallya really now on the back foot here, just as the extradition case is nearing completion and where a ruling is expected now in just a few weeks.
Okay, all right. Let's focus on the stock that's really been on top of everyone's mind for the last couple of weeks or the last couple of months. Fortis. Well, Ekta, this time around, the old board members, they've responded to allegations of governance. Run us through those details.
Well, you know, this is basically, just to give you a background, Eastbridge and Jupiter, that hold around 12%, they are the FIIs that hold 12% in Fortis, had basically asked for these old board members, which is basically Dr. Brian Tempest, Harpal Singh, Tejinder Singh and Sabina Vesoha to step down. So now, because of that process, and they had asked for 3 members to be added on the board, they had asked for that process, and because of that, there was an EGM there is going to be an EGM on the 22nd of May, where there will be voting to remove those 4 board members, the old board members, and reconstitute the board. Now, however, these old 4 board members have now responded to the allegations by Eastbridge and Jupiter, and it's a really long letter to go through, but a couple of key highlights that I just want to mention is that they have responded part and part about all of the particular things which have been brought up, such as the board vacancies, such as the kind of the kind of removal of the board which has happened, and the lack of strength of the board, etc. So, for example, the audit committee, which consists mostly of these board members itself, had initiated an independent inquiry by Luthra and Luthra. This is post all of these allegations of, fraudulent siphoning of money, etc. None of the allegations, according to the board, were against the current board members, and the board members have offered themselves for questioning. They have gone on to mention that the board had witnessed 5 resignations in the past 3 months. They basically weren't filled, now including 2 of the promoter directors, which is the Singh brothers. Now, the separate 3 resignations that took place, the particular letter says that the reason for that was basically just coincidental. So all of the personal reasons which were provided by those 3 directors are actually personal reasons, and there is no other is nothing beyond a coincidence in that particular case. They've gone on to clarify on multiple other issues, such as basically the transaction at Fortis and the process of decision making, which is basically why they are only considering binding bids and why they're not considering non-binding bids. Separately, what the way forward would be, also equal representation on the board, plus the new board members coming on board, etc. So it's a long letter basically trying to refute all of the claims which have come up by Eastbridge and Jupiter. It will take a couple of more minutes to go through the finer details of this, but it is basically their stand saying that, these are the reasons why on the EGM on May 22nd, the shareholders should probably not vote for us to step down, and we have carried on our fiduciary duties as was required.
Okay, it's getting so exciting. My God, we'll have to keep an eye out on this stock till, in fact, that long-awaited deal does come about. But on that note, we'll slip into a short break. Then a quick check on the Asian markets. Well, in fact, we had the Nikkei that was struggling. That market's still down close to around 0.4%. The Hang Seng, though, it's holding as flat as can be. And the Shanghai market, as we speak, that's down close to around 0.2%. But plenty of earnings we have today, and in fact we have Eicher Motors as well as JSPL that will be reporting this set of numbers. Federal Bank from the banking space, that reports it said. Abhishek's with us. Abhishek, tell us, what do we expect from there?
Good morning, Nigel. So, Federal Bank over the last few quarters has been performing really well. One need to look at the slippages. Now, slippages have been in the range of 250 to 300 crore. Last quarter, it was at 412 crore. So, anything below 300 crore will be positive. Low-cost deposit flow should be strong for Federal Bank. So, net interest margin, anything above 3.3% will be positive. Loan growth has been in the range of 20 to 25%. But given the fact that Q4 is always a strong quarter for the banking industry, anything about 25% will be positive. Now, gross NPA, which was at 2.52% in the previous quarter, anything below 2.5% will be positive. Our polls suggest an NII growth of close to 16%, while net profit to grow at 10.5%. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So that's on Federal Bank and what exactly they would be reporting. But AB Capital reported what was a strong top-line growth as well. Tell us more.
There was a sequential decline in profits. Now, despite the fact that, top line grew by 90% plus on a YY basis and 20% plus on a sequential basis, the profits declined sequentially, and that was due to higher OPEX. They had higher OPEX in their NBFC business, and apart from that, even the life insurance payout was slightly on the higher side. Back to you.
All right. I think on that note, we can listen out to what the management had to say about their numbers.
Life insurance has had a very good year. Our first year premium grew by 20% last year. That's on the back of a 35% growth in the previous year. Really all channels firing for us. We are a broad-based multi-channel distribution business. We have agency, we have third-party banker, brokers, and direct. All of them are firing for us. So HDFC Bank is a very large bank. It's got a phenomenal branch network across the country. So clearly we expect that it will add a reasonable amount to our growth numbers. It's very difficult to pick a specific number for life insurance, but typically, it grows about twice the GDP rate. The industry typically grows at twice GDP rate, and hopefully we'd grow faster than that. Inorganic opportunities is something we're looking at across the platform. It's something the group does very well. It's something that we will always look out for. I think the NBFC business, we see continued growth going forward. We are a diversified NBFC, therefore we can cater to a number of customer segments. That I think gives us a much broader platform to be able to grow on. And I think we want to leverage that platform. We should see good growth in the NBFC business. Housing finance, I think again as you move into the smaller towns, into tier 2, tier 3 cities, and we just launched affordable housing last year, I think that's a big growth driver for us.
Well, let's stick to earnings today. We have JSPL, which is coming out with numbers as well. So, Nigel, what are we expecting?
It'll be a very, very strong set of numbers, Ekta. And the last couple of days, the stock, in fact, has rallied nearly around 5 to around 6%. Basic numbers, consolidated numbers, top line, strong growth. Margin should be more or less steady. And this time around, we're expecting a profit, a very small profit, but most on the street, they're expecting a profit. Only a couple of brokerages are expecting them to deliver a loss. And in fact, this will be the first profit number that they're delivering after 13 straight quarters of losses. The key reason is going to be strong steel prices as well as ramp up of the Angul facility. First up, let's talk about the steel business then. We already have the sales volumes. That's coming at around 1.18 million tons. So that's very, very strong. It's a 28% growth. Remember, steel prices in the fourth quarter, they did very well. JSPL is predominantly into longs, and long prices, they surged up more than what flat prices surged up. So remember, longs are used for construction activities more than, cars as well as other white goods. So that's what's going to help them. That's what's going to help really the EBITDA per ton to improve. Because yes, raw material cost has gone up, but in fact, we believe that the realizations will come in higher, and that's what will offset any kind of raw material spike. So the EBITDA per ton should increase to roughly around 11,000 rupees on a per ton basis. Some on the street are even talking about 12,000 rupees on a per ton basis. So we'll keep an eye out on that front. The big factor is going to be pellet prices. Remember, the second half of the year, pellet prices went through the roof. I remember at one point of time, there was a big underutilization of their pellet facility. That's what's really going to help their steel business this time around. JPL, the Jindal Power, that's going to be a drag. Volumes will be lower there, profitability as well as lower. Some on the street expect nearly around 200 crores in terms of an EBITDA number to around 250 crores odd. So that's going to be a disappointment. But Oman, the steel business there, should deliver a good set of numbers. $60 million approximately is what they should deliver in terms of an EBITDA per ton. So that's going to be good. Favorable cost as well as higher steel prices backs them up. Remember, majority of the operating profit is taken away because of high interest cost. And the debt in their books is roughly around 43,000 crores approximately. The key issues to watch out for, the ramp up of Angul and power demand. Some of those graphics were firing for you.
Okay, well, that's on JSPL. Thanks, Nigel, for that. But the big story from yesterday also had to be Jubilant Food, which reported what was a strong fourth quarter number. Same-store sales growth beat estimates, coming in at 26.5%, which was a 6-year high. Mangla Malu joins in with what the brokerages have to say, even post the conference call that took place.
Absolutely, Ekta. So remember, the numbers were blockbuster. The stock cooled off from record highs post the numbers were announced. So the management did sound fairly confident in the conference call. They said that they are continuing to begin increasing the additions of new stores. So they've earmarked about 150 crores for adding 75 new stores in Domino's this year. That compares to 17 new stores that they've added. They will focus on getting higher sales from existing stores, so that bodes well for the future same-store sales growth as well. More importantly, they reiterated their target to achieve break-even in Dunkin' Donuts by Q4 FY19. The last year, Dunkin' Donuts dragged the EBITDA margins by close to around 100 basis points, which was half of what it did about a year ago in FY17, that is. Brokerages are fairly sanguine post the management con call, so we've got a lot of upgrades coming by, right from CLSA, which has increased the target price from 2,800 to 3,150. Morgan Stanley has reiterated the stock as their top pick, so they've also increased the target price closer to that 3,050 mark. Credit Suisse has increased their earnings estimates as well as Kotak. They say that the company has managed to strike a balance between value for money propositioning without sacrificing their margin. So that is something that they like. They've increased their target price from 2,500 to 3,000, so upgrades all over. It will be interesting to see how the stock performs today, given it cooled off yesterday and still is very close to record high. So let's hear out the management from the conference call.
We had been very rigorous in selecting.
Well, we have no more numbers to reckon with. Nigel, tell us about Novelis.
Well, Hindalco will be in focus today. Novelis came out with a set of numbers and they looked very, very good. Now, in terms of shipments, they delivered a number of around 800,000 odd. That was a small growth out there. But in terms of an operating performance, we're expecting a good set of numbers. It came in a tad bit better. So they delivered its best ever quarterly performance in terms of an EBITDA number. The adjusted EBITDA number came in at around $319 million. So that was fairly good. That was a tad bit better than the street was working with, around $314 million odd. Even in terms of an EBITDA per ton, that as well, those numbers look very good. $396 on a per ton basis. The street was working with a number of around $380, $385 on a per ton basis. How did that happen? Obviously, operating leverage is playing out. So that's good news. But they're using a high amount of recycled aluminium. Remember, LME aluminium prices have been moving higher. But recycled aluminium means the scrap prices haven't moved in the same, at the same space. So your output cost is going up at a faster pace than, in fact, your input cost. And that's what's really helping them. Also, they are getting more amount of their sales from the auto segment. That constituted nearly around 20% of their total sales mix. So that's pretty good news. In addition to that, FY18 has been a good year. They've reduced their net debt by nearly around $670 million. And now it stands at around $3.5 billion. And importantly, the net debt to EBITDA, I remember it going all the way to around 4.5 to around 5 times net debt upon EBITDA. Now it's down to around 3 times. Going ahead, they're saying that, in fact, since they've had a good year, EBITDA numbers look good for the full year. The cash flows as well looked fairly good. They have a capex of around $450 million out for FY19. They're saying it's possible they could look at some inorganic growth as well in the United States as well as China. But most importantly, they're going to be maintaining their net debt to EBITDA at around 3 times odd. Brokerages, they're positive. We have Macquarie note that's flashing for you on the screen. But also we have Motilal. They are fairly positive. They're very, very, comfortable with the valuations at around 5.4 times its forward EBITDA, EV upon EBITDA. And also at around 8 to 9 times on a price to earnings basis. Edelweiss as well, they have a buy rating with a target price of 325 rupees per share.
Okay, all right, Nigel. Well, that's on Hindalco being in focus on account of Novelis numbers, but Mangalam now joins in to tell us about the cues from the F&O space.
Well, Ekta, yesterday the frontline index was absolutely flat. The Nifty closed up by about 2.5 points. But the Nifty futures premium, the intraday indicator of pressure, indicated that perhaps there could be some selling, and that is what the data confirmed as well. So the Nifty futures premium came off 24 points to 17 points. Just 2 days ago, that was 41 points. The one data point that we're tracking up until the Karnataka elections is the India VIX, which at the start of the series was closer to the 2018 lows mark, around that 12.5 mark, and now has climbed to 14.06. So that is something we'll be watching out for. The FIIs, they sold about 100 crores in index futures. Looks like there was more selling on the Nifty and there was a little bit of purchase on the Nifty Bank. That's what the open interest changes indicated. But index options data, that is fairly positive, primarily because, yes, there were more puts bought than calls. However, the quantum of puts bought has receded and the quantum of calls bought has increased. So the FIs bought about 3,400 calls and bought just about 6,000 puts, as against earlier where they bought about 47,000 puts and 4,000 long calls were unwound up until yesterday. If you take a look at the index options writing, there were more written calls unwound, which means there is a bit of an upside risk, and puts were written. So 810 short put contracts were added. 10,500 put as well as the 10,700 puts, both of them were active in trade yesterday, saw a bit of writing. Keep an eye out on DHFL. That one enters the F&O band. And a lot of fresh longs, they were added on ICICI Bank, Indian Bank and Container Corp, a stock that has been rising since its results.
Okay, all right, Mangalam, thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.